Zoom screen. I will, because it's just me leading it right today, what we'll probably do, if you have questions along the way, I will feel free to drop them in the chat or the Q&A. We'll try to make sure that we read them at least before we wrap up at the end and do a little Q&A time there. So stick around to the end if you have questions and you want to get things. If I don't either see your question, don't get to it while we're doing our session today, you can always email us. Sales@altosresearch.com is always the easiest one. We will be able to get to all that, handle them, whether it's questions on the data or questions on the Altos Research product or how you use it, all of those things. Great way to just happy to tackle it there. We have special offer for people who are not yet clients of Altos, so stick around to make sure you get that if you are interested in not just knowing the data, but actually building it into your business. So, let's start with agenda for the day. We are going to spend the first part of the session on the data itself. We're looking at national data, a little bit at the state level, a couple of different states, but really looking at the big trends of what's happening right now and what we can see already coming for the fall. So September, October, November, where you can see in the leading indicators in the data. As we do this, if you're not familiar with Altos, what we at Altos do is track the active housing market, every home for sale, all the pricing, all the changes in pricing, all the supply and demand metrics everywhere in the country. We bubble those analytics up for realtors, brokers, title, and all the other related folks in the industry to use that data in their business to reach consumers, to help consumers understand what's happening in the market right now. Traditional real estate data is backward looking. It's last month or it's a couple months old. And so that especially right now when we've got so many crazy things happening in the real estate market, like that backward looking old data can be really not useful or even misleading for clients. So we want to look at the Altos data every week, see what's happening in our local market, and be able to communicate that to the clients. So all the data today that I'll be doing is I'll be focusing on single family. It's all active. It's the whole country. And then when we go into the second half of the session, we'll be looking through some of the Altos product itself, the reports, and we'll do some local stuff. The cool thing that we're going to spend time on today is what we are calling the co-primary home buying phenomenon. I'll teach you what co-primary means, who these people are, how they're buying, and then what we're going to do is spend some time thinking about how we're adapting our digital strategies, our communications with buyers and sellers, people who are thinking about this. It's a new way of thinking about homes in this crazy time, crisis time, isolation time, this period that we're in. So we're going to spend a little bit of time at the end talking about how we can change and techniques that we can use to reach people so that we can help people make really great decisions and take the action they want to take right now. Okay, let us dive into some data. So if you've been paying attention to the Altos data, any of our weekly videos or some of these monthly webinars that we've been doing, the most important trend of our day is inventory is record low. Like everywhere in the country, it's record low. It's still falling. We are losing about 1 to 2% per week of our active inventory. Right now, there are only 626,000 single-family homes for sale in the whole country. And if you look at the chart here, the little green dots are each year at this time, where we normally are. This in the last 5, 6, 7 years, inventory has been declining each year anyway, as more people buy a home and don't sell the first home, as more institutional buyers take up inventory. We have fewer homes for sale each year. So a normal healthy market might be 1 million or 1.2 million or even 1.5 million homes for sale. Peak season right now in July, before the fall really kicks in. When properties pull back, we go into the holidays, and then the market resets in January. So you can see 5 years of cycles here. The January 1 reset, we have normally a second quarter of rising inventory, a peak across the summer, and then it pulls back in the fall. We had this spring, we had just a tiny little bit of normal seasonality in the first 2 weeks of March, and then bam, we've hit each week. Demand continues to outpace new supply by 1 to 2% of the overall market. So we're literally losing 10, 12,000 homes per week to purchases. It's nuts. But it continues to happen. So there are risks in the market. We've talked about we're in a situation where we have massive unemployment. It's about 3.8 million right now homes in the mortgage forbearance program. That's like 8% of all mortgages. The 3.8 million is actually fewer each week. So there are homes that went into forbearance that are now coming out of forbearance. And so that's a good sign, right? That number is decreasing each week. Those are coming out of forbearance. If the home sells, if somebody gets reemployed and can make their payments, there's any number of reasons why they might come out of that forbearance program. And there's a tiny little fraction who have to go back in later, like a fraction of a percent. So that pace feels relatively healthy. It feels healthy in that we haven't seen any catalyst of like a big wave of these homes coming to market. Like we have to sell a distressed sales that like happened in 2008. There's been no evidence of that yet. There are some moments in the future that we have to keep our eye on. October will be the 180-day anniversary of the forbearance program. So they were negotiated in 90 or 180-day windows. So we'll see in October some action happening. And then next April will be the 360-day window. And we may see, that may be a catalyst for some listings. If we get to a point where economy hasn't recovered, people still can't pay their mortgages, and the various legislation that's kept people in their homes so far changes. So if that's the case, then either of those times might be an opportunity when we would see some listings. The good news for America is that people have equity in their homes. We have record levels of equity. And during this period, home prices have been climbing. So the equity is increasing even while folks are in forbearance and haven't paid their mortgages. So when it comes time, they should be able to list and sell in an orderly fashion rather than stop payment and go into foreclosure. Because if you have equity, you want to protect that. If you don't want to go into foreclosure, you'd walk away in a case where you're upside down in the house and the market's tanking. So we have neither of those right now. The market's not tanking, and you have equity. So that bodes well for that, but that's the risk we want to keep our eye on. By the way, the inventory decline is essentially true across the country. Every state, I just grabbed a few big states here. You can see the little spark line, a 3-month trend each week, fewer and fewer homes for sale as they get absorbed. They go into contract, they get purchased, and not enough are coming to market. So that's true across the country. There are a few tiny select markets where inventory is up, and I'm going to talk about those in the co-primary homes section in a few minutes. Let's go into pricing. So during this time, the crazy thing that's happened that, I never would have guessed in March was that as inventory shrank, we've shifted our consumer desires to things like safety, and it's been a very home focused time. Demand for homes is up, and so supply is low, demand is up, prices are climbing, and they keep climbing. Now we have the way the seasonality works in home pricing, very precise, and this is the Altos Research National numbers. You see, we hit a peak in June for the summer months, and then in the third and fourth quarter, typically we have price cuts that happen. We usually would have things like, we want to sell this thing before school starts. So now at the end of July, you see price cuts happening. You see the median price start to notch down each week, still higher than the year before, but it cools a little bit. And you can see that year over year in the seasonality. That's the red line here on the chart, with the green dots being each year right now, end of July. So you can see last year we pulled back a little bit. What's happening this year is at least a month of extension to that normal seasonal peak. So we are still at peak pricing, with just a tiny little pullback in pricing this week. And so you can imagine, though, that we would start to see some seasonality in August, but it still leaves us up 7% year over year. Like, it's a strong pricing year. It's strong for equity. And we can also use the green line here. This is the median price of the newly listed cohort each week. So these are the homes that come to market. And when these homes get priced, this is what we've called, if you've heard me talk before, we point out that this is a wisdom of the crowds example. The crowds being the sellers and the listing agents who know exactly where to price the homes in aggregate. Like everyone, there's always clients, there's always sellers who, want too much, or that, there's strategic pricing things where we want to take a price cut. There's all these strategies that always happen. But in general, in aggregate, the homes get priced, they know exactly where to sell, and they get priced there. And so when demand starts falling off, or when we want to know that we're going to move the house, we start, you can see that the price of new listings inflects. It turns down before the market, and it turns up in January before the market, like 4 weeks before everything else. So these inflection points happen early in the green line. What happens normally is we're normally 6-7 weeks from the peak of the new listings price at this point of the summer, 8 weeks even. This year, we've barely declined at all. So that means that homes are coming to market now price strong because the demand out there is strong. And therefore, the transactions that are going to happen in August and September already have the demand. They have the buyers, they have the people who are pre-approved, like all of those signals. This is a leading indicator that are going to show us through now September, October, and November, transaction price is going to hold reasonably well. So those are where we're at with pricing, and how we know through the fall that pricing is going to stay strong. The demand's already there, the home's already on the market, there's not enough homes on the market, all those pieces leading to a powerful pricing strength through the fall. We do have some big unknowns, and the big unknowns are the bigger economy issues that are really only now starting to emerge. We have big companies doing big layoffs, oil companies in Texas. We have Boeing that just did a big set of layoffs. Wells Fargo laid off tens of thousands. And so there are these risks to the economy. We know that, like, at the federal level, the unemployment and the various stimulus packages are uncertain, and so there are definitely risks where this strength that we've had this year, people are hunkering down, they're buying, they're going into co-primary homes, which we're going to talk about. But there is a case where the market totally tanks and a recession hits hard in 2021. So the interesting thing is those risks exist. There is no signal yet in the data about of that happening. So what we do is, and the reason that we like to use at Altos, we track every week. We track these active market conditions every week. Is if that comes to pass, if we see those happening, or if, for example, you're in Houston and you have, like, what's happening to my, like, we've had some big layoffs in the oil industry. How do I know? And so using the real-time data each week is where we know. And so we'll keep, our eye on, we'll do these videos, you'll see our data each week, and you'll be able to see if that happens, where to find it. So as of right now, we don't yet have any signal of that kind of weakness hitting the housing data. Some thoughts on demand. Demand is high across the country. This is data from the MBA, Mortgage Bankers Association, on purchase applications. And the purchase applications are this bright red line for 2020. Started the year high in demand. We had a few weeks of lockdown, shut it all off, and then promptly climbing a resume. We're now significantly higher than we were in previous years. Purchase demand. And remember, so purchase demand is 20% higher than it has been. And inventory is like 50, 30, 40, 50% less than is normally available. Like, that's the phenomenon we go on. So even in a world where purchase demand backs off to where it's been previously, because, for example, we have recession with bigger layoffs, with those kinds of things that pull demand back. Even in that world, you can still see, because of the inventory shortage, that we would not have a tremendous cut in prices, in values. This is purchase demand. There is some sense that there's a lot of sensitivity to rates. So, we could, if for whatever reason mortgage rates climb, then I would expect to see demand pull back very rapidly. And we can see it. I'll show you in some 2018 data. You can see what happened at that time. And you can really see it when rates started, the last time rates spiked. Okay, other on demand, we know this is Google search trends. So searching for buy a house. And the blue line here is people searching for buy a house. And look at this spike this year, like record levels of people who are searching for buy a house. You can see it in Google search traffic. You can see it in things like the Altos research. We send out the market reports to hundreds of thousands of people every week, and you can see the read rates opening. Like, people are super interested right now. We also have the millennial demographic boom, which, there are 5 million more people at prime buying age right now than there were a decade ago. So we have this combination of things. So you can see why they'd be here. You can see their behavior in things like search traffic and mortgage applications. And we can also see where they're buying. So we'll do a little bit more of that. In terms of, before we dive into the co-primary homes phenomenon, let's look at a couple of the things that as leading indicators, that for reasons that we know, home prices are going to stay robust through the fall. We use price reduction. So this is percentage of homes on the market that have taken a price cut in the last 90 days. Normally, you can think about 35% of homes would take a price cut. And that means, and sometimes it's, 28, and sometimes it's 38, sometimes it gets over 40%. And this is a national number. In some markets, it depends, varies a little bit per market. So sometimes, like for example, in Phoenix, this band of normal is a little closer to 40% than it is to 35%. But that simply reflects that, like, that's the local buying habits. When price reductions are lower, like 25%, like they are right now, that's because demand is sufficiently high. We're getting things like multiple offers. We know that, we listed a home that we thought we were going to take a chance and maybe we'll have to do a price cut, and we don't have to do a price cut. So normally we would have, but demand is sufficiently high. So now price reductions are in like 25% range. And you can see there's absolutely normal seasonality. We hit in March this low point, and then starting the second quarter, we start to do a few price cuts. We want to get it out, peak buying season. In the fall, the third quarter, we start cutting prices more to move the property before the holidays. That peaks in the fall, and then boom, resets for January. So that's how price reductions work. And what happened this year is we started our little bit of seasonal at the first 2 weeks of March, which was already low because we started the year super strong, right? And then bam, we started to get purchases without new inventory. Price reductions declined until June, and then the last few weeks we have started what's really like what normally would be happening in March and April is now happening at the end of July. So we've elongated our peak buying season this year. I don't know when that adjusts. So normally we have school season. Most schools aren't going back this year to in person. Does that mean that people are less afraid to transact, or do we still have some of that normal schedule happening? My guess is we still have some of that normal schedule happening. But it's still, demand is high, supply is low, and it's extended so that we're not cutting right now, or we're a little bit more. And then what happens in November? Like we roll into Thanksgiving. Do we see a spike in price reductions? We won't see a ton, but that's really what we'll be looking at next. So, but what this tells us is another signal, another leading indicator for transaction prices in August, September, and October. If they're on the market now, and there were no traffic, or there's no traffic down the street, or there's no inquiries, then we start seeing price reduction. We start doing price cuts. But because there is, and because we're seeing multiple offers, we don't cut the price. So that's where you can see your leading indicator. You can see, for example, in the States here, California on its normal seasonality, Texas is normally at a higher threshold than California. So Texas might be, at around a 40% normally, where California's closer to 28. And that's a function because California has a chronic shortage of inventory, where it's easier to build and buy and transact in Texas. So you'll see that here. So these are starting to, but all of them below this threshold, showing strong pricing through the fall. And then the last bit of leading indicator that I'd like to spend a little bit of time with is the Market Action Index. This is the Altos Research proprietary number. This is where we look at all of the indicators of demand, and we compare them to the precise supply. And we turn it into this thermometer. For the country, we are in strong seller's market. The country as a whole is a strong seller's market. It's the first time we've been there in many, many years. You can see the line here, the red line is, you can see the seasonal trend. peaks in the second quarter, and really the market action index shows about that seasonal rhythm, which impact things like time and money. How long am I going to have to look? How much am I going to have to spend? Those time and money things happen. The weekly reading is the dotted green line, and the bright red here is the first few weeks of lockdown. Boom, demand pulled off. It didn't even get to buyer's territory, but it pulled back before it started climbing again. And now, we're in this crazy low inventory. Supply is low, demand is high. Like, market action index is climbing week over week. It is really hard to imagine I have to keep checking each week and go did I make a mistake? But it's so it's really been fascinating. We're at essentially record high levels on the market action index, and on a year that started strong. So this will pull back in the fall. It has to, but we're in a super strong, and that indicates, again, it's another leading indicator for future pricing, future transactions and values for things to be strong. So, like I said, despite the risks, the economic risks out there, the current environment, the current data shows no weakness in demand or pricing. Okay, let's switch to co-primary homes. Co-primary homes is a phenomenon we've been spending a little bit of time with lately. And this is specifically the trend of newly mobile workers buying in what used to be rural or vacation spots, but not just buying like a second home. What used to be a second home is now it's a more permanent residence. It's more like a full-time residence than a vacation place. And the reason that we've been calling it co-primary homes is many of these people who are doing these transactions, they don't actually want to leave the city permanently. So what's happening is many of the buyers aren't selling. And you can see this, for example, so the two biggest places are that you see this happening in the big expensive markets, the big urban expensive markets. New York and San Francisco are the easiest places to notice. And so what's happening is inventory, for example, in San Francisco, available inventory is actually at its highest level in many years. But in San Francisco, there's 800,000 people, and there are 449 single-family homes for sale. That's up from like 289. But in a normal city, in a place that isn't so as crazy as San Francisco's been in many years, like Austin or Texas, or Austin or Charlotte, for example, same size cities, would normally have like 12, 14, 1,600 homes for sale for the same population. And so in San Francisco, while it's up, there's not a giant flood hitting the market. There's a lot of folks who are buying in the mountains, for example, and we'll look at Truckee, who are buying in Truckee and not selling in the city. It's a co-primary home for what used to be a second home. In New York, it's people going from New York to San Diego, or even just upstate New York. We see trends going, Boston up to Maine. You can see these trends. What's fascinating is LA is like the trend from the co-primary home market in LA may be LA to Palm Springs or LA to Hawaii. But in the meantime, we're seeing San Francisco to LA or New York to LA, where New Yorkers moving to LA go, wow, I can have some space, but I can still be in kind of a city. I still have my urban setting. So it's a relative thing, but it's a really fascinating thing. I was talking to a client in Missoula, Montana this week, and the market in Missoula is off the charts. It's prices up, it's inventory way down, the market action index is through the roof, like all of these things are happening in Missoula right now. And it's people coming out of California and New York, people that are buying let's buy some land, let's buy in the mountains, let's buy some ranch space in all kinds of places that are that used to be like vacation spaces that are now like, well, I'm going to spend most of the year there. So we're calling it the co-primary homes trend. That was a phrase quoted by or coined by Jonathan Miller in New York, and we think it's really applicable. So let's shift gears a little bit. So with you as agents, and we're marketing and we're working with clients, what do we do to shift our strategy to adapt for this co-primary homes phenomenon? And is it true everywhere? Like, can we take advantage of this everywhere? So let's talk a little bit more about who these people are who are buying co-primary homes. They are remote people buying, and they're often deciding very quickly. It's San Francisco is buying in Tahoe, or it's LA is buying in Missoula. It's New York buying in, Whitefish, Montana, and it's fly in, see the place, make an offer. Like, those things are happening very quickly. The motivation is affordability. So, if I've been spending $6,000 a month for rent in New York, like I can get a lot of home in Whitefish, Montana. It's lifestyle, of course. So that's why the resort places are booming. And it's family. So a lot of family where, we can take a family space or be closer to family. So some of the co-primary home is, New York going back to Iowa, or it's New York going to Charlotte. And so the people are saying, like, I love to be there. Now I can be there. I may not, and so it's a affordability, lifestyle, and family. When we look at affordability, we can see a couple of price points where the real action is. In the resort markets, we can see activity at about $750K, and that is, and then in some of the more like rural places is more like 380. And so these are, you can imagine, interest rate driven. So it's like, because money is so cheap right now, it is a really good time to buy. And any of these things are super affordable. They are also likely driven by like Fannie, Freddie, or FHA guidelines, like price points where amount we can finance and call it a primary home. There are, so you can see some clustering happening at those two price points that may be useful in your marketing. And then very often it's the renters who actually move most quickly in this space that are doing we call it the second home, first mortgage. It's I'm a renter in the city and I'm buying in Maine so that I can have a home and I can have a place to be at. And sometimes, very often, the renters, especially if they're expensive, giving up the expensive city rents. But if you're a homeowner in the city, if you're in LA and you've got your place in Palm Springs, you have a cheap mortgage and a lot of equity on your home in LA, there's very little desire right now to sell that. Like, it's a really good time to keep owning your house. So this is one of the reasons that inventory keeps falling. Like, we're buying, but we're not selling. So this is who the people are and how they're sort of making their decisions. What can we do? This is how do we adapt our digital marketing strategy to reach people who are interested in the co-primary homes phenomenon or taking part in this trend? The most important thing, the really fascinating thing here is very often, we entice buyers with IDX listing alert emails. Like, here's what's for sale, newly on the market. But in a world where inventory is super tight, there's no listing alert. There's no listings, there's no listing alerts. So market data, your Altos reports in their inbox is always fresh. It's always good each week. There's new insights in it. And so shifting from just listing alerts to a market data email lets you be on top of this, lets you address folks even if there are no new listings this week. You can still get them in their inbox. And really what's happening is, people doing this, they have so many questions. Like, if I'm buying in Missoula and I was there a year ago on a mountain biking trip, and now I'm thinking, what if I just buy there? Like, I don't know that market. And so using market data to teach me how many are for sale, how many are for sale in my price range, how quickly do they go, how quickly do I have to make an offer for them? What am I going to get at my price range? How many beds, baths, how much land am I going to get? All of these questions are what we answer with the market reports. And so we want to shift from, the super simple that all your competition has, like, here's what's listed, to here's what you should know. You can combine this data. So we obviously email it out. And then if you want to take it to the next step, we do things like virtual office hours. You can say, hey, I am holding on. Like, if you're thinking about buying in Truckee, or you're thinking about buying in Charlotte, here's what you need to know. Let's do it. And you do Q&A time. You can do targeting your advertisements. So very often, we think about being an agent in Des Moines, targeting Des Moines. But really, the opportunity shifts to how many, like, can I target people who are 25 to 40, who live in the big cities, who were born in Iowa? And then I can say, come home to Des Moines. And think about how far your housing budget goes in Des Moines. Be near your family. These are the opportunities that we need to shift. And the key is that the market data and your market reports are the perfect lead conversion reward for them. So you need to know what's going on. Let's talk about it in my virtual office hours. And everybody who comes gets to see the data every week. So now we put them on, we have a drip that they can see the market data each week. And we can communicate in those areas. You can look, for example, at the price points in the report and talk about how they might be your price points. Maybe you can see the 750 or the 380 price points in your reports. Let's switch over now actually to the reports, look at some of the data in some of those markets, and then how the system, the Altos system, might get you into that conversation. Okay, I'm going to do this screen share here, and I am going to screen share here. Like that. Okay. Let's start with reports. This is an Altos report. This one is branded for me at Altos, but of course, for you as an agent, you want to, when you subscribe to Altos, this is branded for you, so it's your market report for your local market. I picked up Truckee because this is the one that I think about a lot, being in San Francisco. Truckee is Lake Tahoe. All of the Altos reports are always readable. And so even if your buyer, your co-primary home buyer, hasn't spent time in the market yet, they can pull up your Altos report and read, the market continues to get higher, more sales demand and fewer homes have contributed a relatively long run of increasing prices. This market action index is the at a glance. I want you just to keep your eye on one number and see what's happening in the market. And you can see in the last month, what the market was already hot in Truckee, and it's just exploded in demand. So purchase demand, inventory is just fallen through the floor. Like, it's a really, really crazy time right now. We can use the data in the reports. All the Altos reports this is all the current data. You can mouse over to see the little spark line and see the trend of the last 3 months. You can see what's happening in, price per square foot is climbing. All of the things going on here. Remember we talked about price reductions, and normally you might have 30% of your homes on the market have a price reduction. But when demand is super high, we get multiple offers, and now we have fewer and fewer price reductions. Look, so we're at 15% price reductions. That means anything that you're listing now is like the demand is there strong for the fall. Like that's our leading indicator for where things are going. Price increases is fascinating. So these are times when you may take a property off the market and relist it at a higher price, or there may be flips happening. So we could see price increases. So that's like a super strong indicator of demand happening there. You can see the trend on the market action index in the last 3 months is just, going up each month. And therefore you can see what's happening in the price. So this is home prices. Here's March when things tanked a little bit. And then now we've just got super strong pricing week over week. We can just look at, this is the weekly number. We can look at, here's our inventory trends over time. And, you can see, what's happened. Here's normal March, May, boom. We're just getting absorbed. So much co-primary home demand happening. And then we look at the price range quartiles. Everything that Altos does is in the 4 segments of pricing. So in your zip code, in your part of town, all of the markets are in 4 segments. And this is because, the high end of the market may be behaving very differently from the low end. In Truckee, you can see, just under 700K, boom, 20 days. There's a lot of stuff that's, big, expensive places still taking 153 days, but that's $4 million. So anything like $1 million and under is moving super quickly in Truckee. And that is, as we're doing our virtual open homes, as we're doing our targeting, as you're doing your communication for example, sharing to Facebook, like that's how we communicate to people. And so if you're interested in buying in Truckee, talk to me now, because we need to be ready to act quickly. We use that opportunity to communicate in the price ranges that they are most interested in. Up here at the top of the Altos reports, there's the subscribe button. So now you've shared on Facebook the data. When they come here and they search for their part of town, they get the lead conversion form. So we build lead conversion into the content so that you don't have to do anything else. They actually just use the report. They share it with their friends. They say, oh, we just bought in Truckee. Here, you need to have my realtor's report. And they hit the share button, share via email. That then lets you capture who shared it and who they shared it to, so you can initiate that conversation. So that becomes top of the funnel conversation for you as well. They click the call button, they're looking at the report and they need to understand what's going on. Boom, they click, they call you, now you've engaged, and they've moved from just, an inquiry to an actual opportunity to buy. So that's Truckee. But we can look at this phenomenon across the country. I mentioned Palm Springs. So, Palm Springs is a second home destination for LA. But now we've gone from, hey, I'd like to have a vacation home, to, hey, I'm moving to Palm Springs for 6 months for the winter, and I can't. And so you can see in Palm Springs what's happening, what's happened with the market action index in the last month has gone into strong sellers market. We can see prices climbing and price per square foot climbing, all inventory plummeting, all of these things happening. We can also see, here's your $750,000 price point, 57 days on market, right? You can see how that's where the demand is in Palm Springs. We can check things like days on market here, which is a little less clear, but you can see in the last few weeks, the days on market dropping for the market as a whole. We can look at days on market and you can for the different price ranges. And if we take off the top two, you can see really where the demand is right here in that 750 and under range. We can look, here's Bozeman, Montana, and Bozeman is, a ski resort town, and, we'll look at pricing in Bozeman, 450, and then whoop, this year, demand super taking off. You can see demand here, 750 and under in Bozeman. We were looking in, here's Maine, Saco, Maine. So a friend from Boston moving there, and there's strong sellers market. All of these places. So you can see, and we were talking about Charlotte as a destination, and you can see the demand in Charlotte, the inventory falling, prices climbing week over week. And so Charlotte's an interesting place because, Charlotte is also at risk of some things like layoffs from places like Wells Fargo or, banks that have presence there. But at the same time is also a destination for a lot of people around the country who it's a gorgeous place to live. So, we've seen, there's your March decline and your April, May, June, July spike in prices. Here's your demand, 750 and under. Here's, 1.3 million at the high end, and everything under that is moving in under 60 days. You can see the power all the way through. And then I'm going to do a little quick tour wrap up of the back end of the Altos system so you can see how you might use that. In Altos, you subscribe and you get on the reports page, you have all the reports. This is mine, I have the whole country. You get to see how many views, and you can click on and see who's viewing them. You can see, here's Truckee. We have one-click promote. So now you want to do your Facebook ads with the market data. The way the Altos system works is our system will write the ad copy for you based on the conditions. So now if I hit this promote button, it will place ads for Truckee that says the market is on fire right now in Truckee. Click through to see all the details. And so you get a really high click-through rate. It's top of the funnel contacts that are turning into just their nurturing over time. But some of those folks are really interested in transacting quickly. So it's a good time to be running those ads. Most of the time, Facebook ads are really early, top of the funnel ads. And so they're just great to start to be building for long-term. But some of those right now are people who need to transact right. The co-primary buyers who are ready to transact now. We have our contacts. These are where now they've converted as leads, and they are they get added to their report, and so then you can see who's reading their reports, which cities they're getting when they ask for more. And I'll say, this is my personal one. That's a co-primary home purchase looking in Sebastopol. This is one in San Francisco wondering about moving out. These are the activity that's happening is co-primary homes. And then finally in Altos, we have our campaign. So we do the email campaigns for you. So you don't have to think about it. What I've done is created a campaign for co-primary homes. I have a bunch of campaigns for people that go out over time. You can see in my new contacts that they get this one automatically. I'm sending it to 125 people, and the open rates, they keep opening it, right? Open rates are just remarkable because they absolutely want to know what's going on right now. People are thinking about buying and they're trying to figure out where. So I created a campaign for my co-primary home buyers. You might say, if you're in Truckee, you might say, how to buy a home in Truckee. Or you might say, thinking about moving home to Des Moines. And in the content, we say, it's time to remote work from the mountains. And I want my clients to be informed. So I'm going to send you my Truckee report each week. Keep your eyes on the market action index. That'll tell you how quickly we get to act. And this is the kind of email we can send automatically for you to nurture your clients over time and to nurture new buyers and sellers with the right information. And remember, very often we are thinking about listing alerts. So, oh, you're a buyer, let me send you the newly listed properties. But because we are so restricted, there are so few new listings, it's really important that we communicate with things like data that are always there and are always fresh. So let me just do a quick wrap up of the and then I'll do a quick view of some of the see if I can answer some of the questions on the fly, and then we'll wrap up. So we're using the data to keep the contacts warm. I mentioned, when you subscribe to Altos, you get your contacts automatically nurtured. You can see who's using it. That means you know who to pick up the phone and call. We briefly touched on the shareability, share to Facebook, share the Facebook ads, one-click Facebook ads, or even doing things like doing very special targeting far outside your current area for things like your co-primary buyers, people who are interested in buying in your area. Low supply is still supporting home values. So even in places like San Francisco and New York, where there are people buying outside, inventory is still not like excessive, and prices are supported. Although in San Francisco, so if you're an agent in San Francisco, the opportunity is there are now more opportunities for buyers than there have been in a long time. It's time to take action for those people who are like, finally, I want to buy in San Francisco. We're adapting for co-primary homes. I hope I did justice to the concept. I hope you're now feeling not only what the trend is happening, but also how you can reach them and why it is so important to use your Altos data to do so in a way that, because we're answering questions that people have not had before. For anybody, for new subscribers, you stop by the Altos website, use the code August 20. We'll give you a free month as you're getting started. Make sure that you are booking the strategy session now. So go to altosresearch.com, click the learn more, request a demo button. We'll book a strategy session. We'll spend time talking about the data in your market. We'll talk about how you can integrate into your website so you get people to use your resources, how you can use the drip instead of things like a listing alerts. This video will be on our YouTube channel, as are all our weekly videos. So go by the YouTube channel, Altos Research, and subscribe there. We're doing a short 5-7 minute video each week. And as always, drop questions to sales@altosresearch.com. I'm going to look real briefly and see if there's anything in the chat that we can hit. Quick question on when you subscribe to Altos, you get to automate your drip for all the for the areas you subscribe to. But if somebody comes to your report, they can use the search box for anywhere. So it's a nice connection for folks like if you want to say, hey, go ahead and search another part of town, and you don't have to subscribe, but you still get the lead. So that's a nice way to do it. And you can talk about those. One person who's not going back to Iowa. I will spend a little bit of time, and hopefully maybe I can put some of the recording, some of these the questions in some future videos. Drop us an email if we want to talk more. Thank you all for joining us. I appreciate you, every one of you. It's been a lot of fun, and we'll be really fascinated to see what happens with our co-primary homes in the next few months.